All right, and I hope everyone's doing really well. Guys, my name is Sourabh Mutha. I'm a part of the Yeshus team at Unacademy. I'm bringing to you a very exciting lecture. This is CA Inter. This lecture will cover an exam paper and an RTP. So if you're at CA Inter giving the December exams or even the May exams, and if you completed your portion, then this video will help you get some really good understanding of the questions that are asked in the exam. But before we move to anything ahead, I just want to share with you something that we're doing here at Unacademy for CA Inter students. Guys, here it is. This one is an Accelerate with Yeshus program. This is for May 22 students. Guys, if you're a December 21 student, then please watch out for the fast track course that we've just completed at Unacademy. The fast track course is only and only for December 21 students, and it covers everything there is to do in your group 1 and your group 2. But if you're a May 22 student and you don't need the fast track, you want a comprehensive course, then this is it on your screen. It starts on the 13th of October. It's for group 1, 100% English comprehensive batch, and bringing to you the best faculties there are in the business. Taxing, cost, accounts, law, everything will be covered. Personally, for me, I will cover tax with so many shortcuts. I will give you a glimpse of those shortcuts here as well. Even my fast track course, my strategy is that when you come to class, you learn everything in class. You by heart the sections, the subsections, the concepts, everything is done in class with a lot of shortcuts that will help you revise very well one day before the exam as well. With this subscription of Yeshus and Unacademy, if you use the code Yeshus, you get live interactive classes, a lot of unlimited recorded lectures, multiple educators to choose so that you can choose the best educator that suits your understanding and your level of learning. Doubt solving sessions and test series are always part of what we do here at Unacademy. So get a subscription today at the price, all subjects at the price of one, multiple educators for one subject, and multiple revision, tax marathons, etc. are also given to you. The plus subscription for CA Intermediate costs about 1,125 rupees per month if you take for 24 months. There are other plans also for 12 months and 6 months, and you can choose whichever you want. The iconic subscription, which basically has more benefits like one-on-one mentoring, doubt solving, etc., is for 6 months, 12 months, and 24 months. Again, here is the breakup. Here is the breakup for that. The CA Iconic program is a flagship program for CA Intermediate aspirants, and that includes a one-on-one personal coaching. So guys, whenever you are stuck with some difficulty, you can do a one-on-one personal, you can request for one for strategic sessions on this learning platform. It's a live mentoring platform, which is going to be introduced really soon for Iconic students. There's also one-on-one doubt solving that if you have any doubts around any concept, you can always clarify it. There are test series which are evaluated. There are printed books which will be given to you, and there will be industry expert sessions. And not just that, everything will be covered under one subscription. So you'll get everything under one subscription. Of course, as you know, there are live classes, study materials, unlimited access, and structured courses for you from the best educators on Unacademy. So here is the one-on-one live mentoring and Iconic. This will give you a definite edge to your exam preparation. And not just that, there are dedicated mentors to help you step by step in any place where you're stuck. The evaluated test series details are here. A 3-stage test series for every attempt. Live test on the 40th, 80th, and 100% of our syllabus completion. And it basically will help you gauge your preparation levels and give you a little idea of what to expect in the real exams. And after that, you will get personal feedback based on your performance from experts. This is what the Iconic subscription will get you. So watch out and get this done so that you can enjoy the benefits of an Iconic subscription. Well, right now, my name is Sourabh Mutha, and I'm here to help you with some nice RTP questions and an examination question. Let's see how much we can do in the time that we have. But let's move ahead really quickly to something that I'm showing on the screen. Just a second while I upload it on the screen. All right, here it is. Guys, this is the RTP of November 21. And first up, RTPs are really important because RTPs give you a good idea of what to expect in the exam. RTPs are not given by any classes. They are given by ICAI, and hence they tell you what ICAI is expecting to ask you. This one has Section A income tax law, which we are going to do a part, and we are also going to do the GST part, that is indirect tax part. Here we finish the case scenarios. In case you've seen the earlier YouTube live, then you would have seen the first questions. We've answered all these questions 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All these we've also answered the 11th and the 12th question. No, we were at the 11th one. So 12th, 13th, 14th, and 15th of income tax, we will do that right now. And as and when how much ever time permits, we will also move towards the indirect tax GST part. Let's do this. And while we do this, I will tell you what amazing shortcuts can really help. I will tell you how shortcuts can really, really help. All right. Miss Aarti is a resident individual and she provides the following information of her incomes and losses. Just one second. For the year ended 31st March 2021. This is a set off chapter. But guys, set off chapter, if you've learned it from me, you already know the shortcut. But otherwise, guys, set off is something that can be a little challenging. But I have a very, very nice shortcut based on a blood bank. How when you require blood, how do you go to a blood bank and how they match your blood? Based on that, a very, very simple but amazing shortcut that will help you in set off. I'll try and use it here as well. What do we need? We need to compute the gross total income, guys. So no deductions, only the gross total income of Miss Aarti and ascertain the amount of loss that can be carried forward. Let's do this. Slow and very, very steady. Let's do this. It doesn't matter which books you refer to, doesn't matter where you studied from. As long as you can understand this, I'll help you understand this really well. Set off is an important chapter, and one question from set off could be expected in your exam for about 5 to 6 marks. Guys, this is Aarti. I'm just making her income from salary. So this is a salary income, which is the first thing that I see on the screen, 8,20,000. So salary is done. I move ahead. I'm making space. Next is income from house property, which has not been calculated. So 1,20,000, that is income from house property. Just one second. Income from house property, and it is 1,20,000. That is the NAV. That means we haven't yet calculated it. So this one is 1,20,000. We know from NAV, municipal tax is already minus, so you can minus 30% flat, and any interest also you can minus. So I'm just going to do the calculations later, but I'm just going to keep this ready, IFHP. Next, share of profit from the firm in which she's a partner. Guys, any share of profit is exempt. So this one is exempt under section 10(2)(a). So it will go in a working note saying that this is exempt. Loss from specified business covered under section 35(a)(d). So I'm in PGBP. And this is a specified business. I'm just writing specified business. In my blood bank example, guys, this is unique blood. Basically means that this loss, you will only need the same kind of profits to be set off. So this one is very, very unique blood. Again, saying that if you have specified business income, then you can set this off. Otherwise, you will have to carry it forward and wait for other specified business income to arise in the next years. But the carry forward is unlimited in this case. So this is a loss. I'm putting them in brackets. Income from textile business before the following adjustments. So guys, this is non-speculative business. And the business income is 3,30,000. But of course, you need to minus certain things which they have not minused yet. They have given you three things: current year depreciation, unabsorbed depreciation of earlier years, and brought forward loss of the earlier years. What do you minus first? The current year first. So current year depreciation, I'm going to minus. That is 53,000. And after that, I know there is about 2.5 lakhs worth of amount remaining. So from that, which one will I minus first? Unabsorbed depreciation or brought forward loss? Whichever expires soon, unabsorbed depreciation can be carried forward indefinitely, whereas brought forward loss can only be carried for 8 years. So that I will minus first. So carry forward of loss. I'm going to minus that 1,90,000. So 3,30,000 minus 1,90,000 minus 53,000 leaves you with only 87,000. So 87,000 is the balance. But there is unabsorbed depreciation of 1,85,000. Unfortunately, I don't have 1,85,000. So I can minus 87,000 I can minus for my unabsorbed depreciation. So from 1,85,000, 87,000 has been minus. So that leaves us with 98,000 of unabsorbed depreciation. So my entire profits are gone. Yes, my entire profits are gone. Now I only have 98,000 worth of unabsorbed depreciation. We will see. I'm just putting everything in back to back in the different heads. Next is capital gain head. In that we have a long-term capital gain. Long-term capital gain. Because we don't have to calculate tax, I'm not even seeing from where you're earning the gain. This is 1,50,000. Then you also have long-term capital loss of 1,50,000. So long-term capital loss of 1,50,000. This can be set off against each other. Yes, so that's 0. And then you have another long-term capital gain. Doesn't matter from where because we don't have to calculate the tax anyway. That is 2,50,000. And then there is dividend. So IFOS income 1,15,000 is IFOS income. And repayment towards housing loan from a scheduled bank. You've paid 4,85,000 to a bank, out of which 3,28,000 is towards interest and the rest is principal. Principal is given as a deduction under 80C, but we don't have to calculate it because we have to only calculate gross total income. So in that case, we have to only look at the interest. This interest will be minus 24A, 30% you'll minus. So 1,20,000 into 30%, that is 36,000. And also you will minus interest. Guys, this house is let out, so there is no capping on the interest. You can minus the entire 3,28,000. So after minusing both of these, 1,20,000 minus 36 minus 3,28,000. So that gives you 2,44,000. 2,44,000 is a loss from house property. Now that the entire stage is set, guys, this is not how you will present it in the exam. You will quickly make this diagram in the exam, and then you will write it in the table format. I'll show you how to write it in the table format also. But right now, we don't need any sum. We just need to solve this. First, you will do within the head adjustment. Salary, there is no requirement. Income from house property, there's a loss, but I cannot do intra-head anyway. PGBP, I've already done it. Capital gain I've already done. IFOS, there is no loss, so no requirement. Next is one head will go to the other head if required. Salary will not require because they have a profit. Loss from house property can be set off against any head except guys, casual income, it does not. So you can go to any head, but right now we have salary, so I'm going to minus it from salary. But you can only and only go for maximum 2 lakhs of set off. That's why my shortcut says this is a friendly head, but it is shy. Why shy? Because only can take 2 lakhs. So 2 lakhs will be taken. 44,000 loss is a loss from house property, which will be carried forward. So I'm putting this curvy line under it, which means it will be carried forward. And from 8,20,000, 2 lakh is minused. So that leaves you with salary income of 6,20,000. This will be taxable. Yes, this will be taxable. No other set off from salary. Let's see. IFHP is done. 44,000 will be carried forward. Let's go to PGBP. PGBP, we don't have any specified business profit, so this has to be carried forward. So I'm putting a curvy bracket there, put curvy line there. Non-speculative business, we've set off everything except unabsorbed depreciation, 98,000. Guys, unabsorbed depreciation can go to any head except salary. So unfortunately, we cannot use that 6,20,000, which is there in salary. So this 98,000 of unabsorbed depreciation, you can minus from other heads, yes, except casual income and except salaries. So 98,000 I'm minusing from here. So this becomes 0, and this becomes 2,50,000 minus 98,000 becomes 1,52,000. This will be taxable, long-term capital gain. IFOS will be taxable. Now, guys, anything to be carried forward? Yes, two losses to be carried forward. So the ones with the curvy line have to be carried forward, and these three incomes will have to be offered to tax. How do you show it in the exam? In the exam, you will write computation of total income, gross total income, etc. And you will start in the same way. First, you will write income from salaries. You will write 8,20,000 in the inner column, and then you will write less loss from house property, and you will minus 2 lakh, and that's how you will show 6,20,000 in the outer column. Same way, you will go next to income from house property, and just the way you've calculated all this, you will do the calculation and you will say 44,000 is carried forward. So now when you do the solution, you will put one by one the incomes and whatever extra losses have been minused. So that is how you will carry forward. That is how you will carry forward in while you write this exam question in the exam. So this is how you will carry it forward. Just 1 second, guys. I'm uploading another sum on this. Perfect. So this one, then you will go to PGBP. In PGBP, again, you will write non-speculative business 3,30,000. You will minus all of this and unabsorbed depreciation. This and this you will carry it forward. Unabsorbed depreciation will become 0. Then you'll go to capital gain. You will set off just the same manner that I've done. You write unabsorbed depreciation here, and you will get 1,52,000 in the outer column. In IFOS, you'll write 1,15,000 in the outer column. Perfect. That is how you will do the sum, and that is how you will score great marks, guys, because one of this question on set off is usually there at CA inter levels. Let's look at the next question. So there is 13, 14, and 15. Let's look back to back with all the three questions. Mr. Uday Shankar, who's 67 years old, is retired from a public sector undertaking. He resides in Indore, Madhya Pradesh. He provides you the following particulars of his income and certain payments, investments for the year 2021. Let's see now what are they requiring. They want us to compute the total income of Uday Shankar for the year, and assuming he does not opt for 115 BSc. Guys, if you're looking out for 115 BSc ever, I have a YouTube video already uploaded. Just search my name and just go to my YouTube channel and watch the video. And this 115 BSc has been simplified to a large extent. It is so simple if you watch the video. But in any case, here we don't have to opt for it. So you have to ignore it. And we have to only look at total income. That means all the heads, deductions, and total income, no tax. Perfect. Let's start this. He resides in Indore. Uday Shankar is assumed to be a resident, guys. And for a resident, what all income? Let's tally it. First, how will you start this? You'll write computation of total income of Uday Shankar for the year, whatever the year it is. And then you will write particulars, amount. And you will start with income from salaries. Guys, pension income is when you retire, you get pension income. But remember, pension income is taxable in the same way as salary under the same head, that is salaries. So 7,80,000. But always remember, there's a standard deduction in salary of 50,000. So that you will minus 50,000. So in the outer column, you will have 7,30,000 from salary. There is no PGBP. Right now, there is no capital gain. There is no income from house property, straight, that is IFOS. So I'm writing IFOS income 2,35,000 gross. Yes, 2,35,000 gross. These are two incomes which Uday Shankar has. Now let's move ahead. Life insurance premium, that's a deduction. Premium, again, that's a deduction. Health checkup, that's a deduction. Interest for MBA course, that's a deduction. Check for promotion of family planning, that's a deduction. And PM Cares Fund, that's a reduction. So guys, the income is done, your income is done. So I'm just going to write total income is 7,30,000 plus 2,35,000, which is 9,65,000. Remember guys, there's a hidden deduction. In case you earn any income and you are more than 60 or more, you get a deduction under 80 TTB. That is the first deduction I will take. Of course, you have to go in line, but because it's there, I'm just going to write 80 TTB and you will get your first deduction of 50,000 rupees because you have income from a bank deposit that is 2,35,000. So 80 TTB, 50,000 rupees. Next, you've taken a life insurance and you've paid a premium of 25,500 for insurance for your own life. 80C deduction you will get. But remember, the deduction will be restricted to only 10% of the premium of the sum assured. The sum assured is 2,50,000, and because it is taken after 1st of April 2012, the insurance premium will be allowed, but maximum 10%. So 10% of 2,50,000 is 25,000. You paid 25,500. So you will not get 25,500, but you will only get 25. So 80C, I'm writing this in the inner column because 80C has a limit of 1.5 lakhs. Let's see if there is anything else also in 80C. This is health checkup. This is health checkup. This is loan, and these are deductions for donations. So you can put it in the outer column happily, no problem with that. 25,000. Next is 80D. I know it because I saw health insurance somewhere. Premium of 36,000 paid by check for health insurance of self and wife who is also senior citizen. The limit is 50,000. So this is 36,000. I'm writing 36,000 here in the inner column because I know there is some other health checkup as well. 3,500 paid in cash for health checkup. So that also you will add. And that should be within the limit of 50,000. Yes, it is in the limit of 50,000. This is 39,500. So this one is 36 plus 3, 39,500. Continuing with 80D, guys, you also paid 4,500 through check for the preventive health checkup of his mother. Guys, preventive health checkup, you can pay in cash or check, does not matter. But 3,500 is already used. The health checkup limit is 5,000. Within the overall limit, there's a limit. Guys, if you want to understand this, let me give you an example. Let's say you get a pocket money of 2,000 rupees from your parents, and they say within those 2,000, you can go for a movie. So if you spend the entire 2,000 on food, can you go for a movie? No. But if you don't spend entire 2,000 on food, can you go for a movie? Yes. Does it have a separate limit? No. It is within same way health checkup is also within the limit. It is within the limit of 25 and 50,000. This health checkup of 5,000. But this is for both categories. You've already used 30,500 rupees for yourself. So only 1,500 deduction allowed for your parents. So 1,500 more under 80D, 1,500 more. That is 80D deduction. Next. Paid interest of 9,500 on loan taken from bank for MBA course pursued by his daughter. There's a section called 80E. E is for education, and the entire E series is for interest. So if you or your spouse or your children have taken an education loan and you're paying interest, then for 8 years, after you start paying, then for 8 years, the year you start paying plus 7 more years, you will get a deduction of the interest you pay. So this is under 88, 9,500. Perfect. Now, there are 2 more deductions, but both these deductions are from 80G series. You are very generous. You have donated 95,000 by a check to an institution approved for the purpose of promotion of family planning. And you've donated 20,000 towards PM Cares Fund. So 2 donations you've made. Congratulations. But remember, guys, the moment you have 80G, there are 4 categories. The first category, you get 100% deduction. And PM Cares Fund is from that. So 20,000, you will get 100% deduction. That means the entire 20,000, yes. The second category, you will get 50% reduction. Nothing of this category is here. The third category, you get 100% reduction, but subject to a limit of 10%. And this one is from here. So this is 100% subject to 10% of ATI. For that, you need to calculate adjusted total income. If you're ever wondering, how do I remember 80G, all these different categories, then watch out for my fast track course. I've helped you a very nice shortcut for remembering every every category also, and in the category different donations as well. So this 20,000, you'll get 100%, but for this 100%, you'll have to check 10% of ATI. Let's do that. What is ATI? Is whatever is your gross total income minus all the deductions except these. So what is your gross total income? Your gross total income, sorry, this is your gross total income is 9,65,000 minus 50,000 minus 25,000 minus 39,500 minus 500, sorry, 1,500 and minus 9,500. That gives you 8 lakh. So adjusted total income is 8,39,500. So your adjusted total income is 8,39,500. So 10% of that, or 95,000, whichever is less. So 83,950 or 95,000, whichever is less. So you'll get only 83,950 from this. And from this, you'll get 20,000. So I'm writing both 80G PM Cares Fund. You'll get the entire 20,000. And for family planning, that fund, you'll get 83,950. So I'm going to minus both of these, 83,950, and that's how you get a total income of 7,35,550. This, my friends, is your total income. I hope this is clear. So this is the total income of Uday Shankar. Excellent question. Why so good? Because it tests your knowledge on 80G. If you're wondering what is 80G, how do I remember so many? I have a shortcut for that, because everything that is difficult is good for me. So I can bring a shortcut to you and help to simplify it. Now, simple things everyone will understand. If you can master these things, that will give you an edge for you to get exemptions and ranks in the exam. All right. If you understood, that's great. I'm going to be back in just 1 minute to do the next 2 questions, guys. Back to back, we will do the next 2 questions. The 14th one is on the screen. And then there's a 15th one before we complete RTP for income tax. Just a minute and I'll be back. All right. And we're back. Perfect. Let's continue with the next one, guys. The next one is about Mr. Dheeraj, who is aged 48 years and he's a resident Indian. These kind of questions are very common in the exam where they tell you to compute the income. This one, you are required to request it to compute his total income, and not just that, his tax liability as well for the year in the manner so that he can make maximum tax savings. Let's do that, guys, for him. One by one, we'll see what the income is and we'll write it here. This is where calculating his total income. Once we get his total income, we'll also calculate his tax. He's Dheeraj, aged 48 years. He occupies the ground floor of his residential building and has let out his first floor for residential use at an annual rent of 3,34,000. So guys, there are two things. Half the house he is occupying as his own residence and half he is letting it out. So we need to do the two calculations. For SOP, life is simple. Everything is nil, 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 nil. Only thing you have to minus is whatever, if there is any interest payment. He has paid municipal taxes of 30,000 for the current financial year. Both these flows are of equal size. As per the interest certificate from ICICI Bank, he's paid 1,80,000 as interest. Guys, my shortcut for this is the moment a portion of the house, like ground floor is self-occupied and a portion is let out, you apportion everything. That's the word. For portion of the house, you apportion. So I'm going to apportion the interest. 90,000 is here. And 90,000 will be for LOP. Principal repayment is basically under section 80C. I'm just going to write it here and keep it ready. 80C, 95,000 is the principal payment to a bank. So you get a deduction in 80C. Here is your loss from house property, 90,000. Why is loss something that makes you happy? Because here you can set it off against your incomes to reduce your profits and reduce your tax. Now let's do LOP. In LOP, GAV is not given. There is no fair rent, municipal value, standard rent. So we'll assume the annual rent to be the GAV 3,34,000. Remember, if there was any unrealized rent, you could have minused it. And if there was a vacancy loss, you could have also minused that one. He's paid municipal taxes of 30,000. A lot of people will write 30,000 here, but remember you have to apportion it. So only 15,000 to be minus. So that gives you the NAV. So 3,34,000 minus 15,000. This gives you 3,19,000. From that, you know there is a 30% flat deduction. So that gives you 95,700. And interest of 90,000, that also you will minus. So from 3,19,000, you minus 95,700 and you also minus 90,000. So that gives you 1,33,300. So that is your profit or income from house property, 1,33,300. This is a profit, this is a loss. You can set it off. Minus 90,000 will give you 43,300, and that is what I'm going to write here. Income from house property, 43,300. In the exam also, guys, when you present, please present it in a way that the table looks very neat, and any calculations like this go in a working note. Perfect. That's the first one, and the second one done. Next, I'm removing this because this calculation is done. So I'm removing this so that we can do the next calculations in the same space. He owns an industrial undertaking established in an SEZ. Guys, my shortcut, I don't call it an SEZ, I call it an awesome area. Why awesome area? Because the moment you establish a unit in SEZ and you export, you get some benefits under section 10 AA, and that's the reason I call it an awesome area, which has commenced operation during the year 1819. So basically you're in the first 5 years. In the first 5 years, you get 100% deduction of the export profit. The total turnover of the undertaking was 400 lakhs and 120 lakhs was export. So in that same proportion, your export profits will be deducted. The profit from this was 45 lakhs. So guys, this is your PGBP, 45 lakhs. Why did I not minus 10AA here? Because 10AA is a deduction which you will minus here. 10AA, I'm calculating it. Your total profit is 45 lakh. You will get a reduction in the same ratio as your export turnover to your total turnover. So 45 lakhs divided by 400 lakhs into 120 lakhs gives you 13 lakh 50,000. That, guys, is your deduction under 10A because in the first 5 years. But if you're in the next 5 years, then you would get half of this. So this is 13 lakh 50,000. I'm writing it here. This one is also done and completed. Let's move ahead to the next one. He employed 20 new employees for the said industrial undertaking during the year 2021. Guys, you know there is a section called 80JJAA, job, add. That's a shortcut. Everything has a shortcut. This job, add basically means that if you have a auditable company, if you have PGBP, auditable entity, and if you employ more people, more additional jobs, and they work for 240 or a minimum 240 or 150 days in the year, then you will get 30% additional deduction. So here, out of the 20 employees, he employed 20 new employees. 12 employees were employed on 1st of May, that is the whole year except April. So they qualify. So 12 employees at 18,000 rupees per month into 11 months. So 12 into 18,000 into 11, it's 23 lakh 76. It's 23 lakh 76. And on the other hand, you have paid for the remaining. So this is 12. So the other was 8 employees. You paid them 12,000 per month and you've kept them from August. Even August, guys, certifies because August, September, October, November, December, Jan, Feb, March. So basically you are there for 8 months. So that is more than 240. So this into, so April, May, June, July, 4 months you're not there, 8 months you put them. So 8 into 12,000 into 8 is 7 lakh 68,000. So these two amounts you add up. These two amounts you add up. And for of that, you get 30% reduction, that is 9 lakh 43,200. So I'm just writing 80 JJAA. And that amount is 9 lakh 43,200. Perfect. So that's another one. He earned 30,000 and 45,000 as interest on saving bank and fixed deposit. So that is IFOS. I'm just writing IFOS 30 and 45, so 75. And immediately, guys, I will write 80 TTA. Why TTA? Because he's 48 years, so he'll get 10,000 maximum under TTA. He also sold his vacant land on 1st of December 2020 for 13 lakhs, guys. The moment there is capital gains, you know, in DT, I already have a shortcut for capital gains, ATSCP. The moment you see an asset being sold, the moment you see this, just get ATSCP, just get these 5 details and you've got your answer. Is there an asset being sold? Yes, vacant land. Is it being transferred? Yes, it is sold. What is the sale price? The sale price is 13 lakhs. What is the cost price? The cost price. And what is the period of holding? Period of holding is more than 2 years, definitely, because it was bought many, many years back, and hence it is long-term. So we know the sale price. We just need to find out the cost, and then we'll see what next. It was acquired for him for 2.8 lakhs many, many years back, and he had also incurred 12,000 as registration. So his original cost of acquisition in 1997 was 2,92,000. But can you take the FMV as on 1/4/2001? Yes, we can. What is the FMV? Guys, the FMV as on 1/4/2001 is 4,80,000. But remember, as per the Finance Act 2020, it cannot be more than the stamp duty value. That means it cannot be more than 4 lakh rupees. So finally, you will take either 2,92,000 or 4 lakh. Cost, the higher is better. So you will take 4 lakhs and you will get indexation, yes, because this is long-term capital asset. Now, you sold it for 13 lakhs, but there's a section called section 50C, which compares this with the stamp duty value. The stamp duty value on the date of sale was 14 lakh. So if it's within 110%, yes, it is within. So there is no problem. You will take 13 lakh only. I repeat, whenever you sell any land on building, which is a capital asset, you check the sale consideration against the stamp duty value. If the stamp duty value is within 110%, so 110% of 13 lakh is basically 14 lakh 30,000. Is the stamp duty value within that? Yes, it is 14 lakh, and hence your sale consideration is perfectly all right. So let's calculate. Sale consideration is 13 lakh. Cost of acquisition is 4 lakh, but we have to index it. Index it, divide by 100. That means the year you bought it, or 2001, whichever is later, or whichever is earlier. Sorry. Basically, you cannot take indexation before 2001 into the year you're selling it. So 4 lakh divide by 100 into 301 will give you 12 lakh 4,000. 12 lakh 4,000. So that gets you a long-term capital gain of 96,000 LTCG. And remember, any long-term is taxable at a flat 20% after indexation. So this one is taxable at 20%. I'm just going to write it here. Long-term capital gain. IFOS is 75,000. This is 45 lakh. This is 43,300. And long-term capital gain was 96,000. I'm putting a star mark here because this is taxable at a flat rate of 20%. This is 10 lakh 50. This is 95,000. This is, I forgot the number here. We'll have to see from the solution. What is 80JJA? 1 second. $943,200. Okay. Perfect. Any other income, guys? Let's check any other income. He also paid insurance premium of 49,000 towards life. Just 1 second. He also paid insurance premium of 49,000 towards life insurance policy for his son who is not dependent on him. That's perfectly okay. This you get a deduction under 80C. So deductions are ready. Yes, deductions are ready. Let's calculate, guys. 43,300 plus 45 lakh plus 75,000 plus 96,000. That gives 47 lakh 14,300. That is your GTI. Sorry, that is your GTI. From this, you will minus 13 lakh 50, 95,000, 9 lakh 43,200, 10,000, and 49,000. So you'll get 22 lakh 67,100. This is your total income on which you need to calculate tax. Now, how do you calculate tax, guys? On the first 96,000 long-term capital gain, you will calculate at 20%. So 96,000 into 20%, that is 19,200. And on the remaining, so 22 lakh 67,100 minus 96,000, that gives you 21 lakh 71,100. On that, on the first 2.5 lakhs nil, from 2.5 to 5 lakh 12,500, from 5 lakh to 10 lakh 1 lakh, and from 10 lakh to this amount into 30%, 3 lakh 51,330. So add up all these, and then you'll get 4 lakh. All of these, if you add up this, this and this, if you add up, you will get 4,83,030. And this is your basic tax. Yes. Will there be any surcharge? No, because your total income is not more than 50 lakhs. So there will only be cess of 104%. And that will get you 5,02,351. But you have to round it off. So it's 5,02,350. That is your tax payable. Perfect, perfect, perfect. Guys, this is how you need to move towards RTPs. The next question, I'm just going to quickly have a glance at the next question so that you are done with this entire question set. There is a person called Ayansh, who is a resident individual and he's into business. His turnover during the year is only 105 lakhs, that is 1.05 crores, out of which 15 lakhs has been received in account paycheck and the balance in cash. He does not want to opt to pay provisions as per 115 BSc. What would be your advice to Ayansh relating to the provisions of the advance tax with its due date, assuming that he wishes to make maximum tax savings without getting his books of accounts audited? If you don't want audit, then you need to follow 44AD, presumptive taxation. In that, out of this 1.05 crore, on 15 lakhs, you can take 6% because that's come through an account paycheck. And on the remaining 90 lakhs, you can multiply it with 8% and this becomes your profit, which is subject to tax. And if you're into presumptive taxation, then only one advance tax deadline is available for you, is only applicable for you, only one deadline, which is of 15th March. Perfect. Can Raghuram file his return belated under section 139(4)? Yes, he can file it belated, but remember, belated can be only till the end of the assessment year. So for the previous year 2021, that is your previous year, the assessment year is 21-22. So you can file it belated anytime till the end of the assessment year or till he picks it up for assessment, the officer, which we'll see at CA final level assessment. But till that time, you can file your belated return. And with that, guys, we've completed the RTP of 21 for DT income tax. I hope you understood everything. For all the first few questions, watch the first RTP discussion, the live discussion, and this one was the second part. Guys, my name is Sourabh Mutha, and my honest and sincere attempt always is to bring to you amazing shortcuts. Everything including 80G has a shortcut. Everything including 80C has a shortcut. Everything has a shortcut. Anything that is difficult, I have a shortcut to make it simple. If you don't believe me, watch out for my fast track course. Also watch out for my regular course, which is going to start on Unacademy very, very soon. I've given the details in the first 5 minutes of this lecture. Watch out in case you want to enroll for that as well. I'm going to see you guys at the other end, and I'm going to be with you till you clear your exams. All the best and see you soon. Thank you so much. This is me signing off. In case you have any things, any doubts, any clarifications, you can always reach out to me or to the Unacademy team or to the Yeshus team as well. Thank you so much.